Even when he killed that deer this weekend, I was like, that was cool.
I did kill a deer.
He got one.
Hunting or by car?
Hunting.
Hunting.
By choice.
Last weekend was opening.
Yeah.
Yeah, this was,
Saturday was.
Mm-hmm.
Do you dress it and all that?
Yep. Mm-hmm. So.
Well, that's your
got me a heart.
Year.
That is, yeah.
He got me a heart.
Yeah.
Oh, did? He got it?
Listen to this. How cool is this?
Yeah, so I don't want to get too graphic, but it didn't go far after I shot it. So I knew it was
Where were you at?
My uncle has property in Lowell.
Okay.
So I shot it, and then it took off running into the woods, and I found it pretty quickly, and then it was dead. And usually they take a while to die.
Where'd you shoot it? What part?
That's what's interesting.
That's the interesting part.
I shot it right in, it was staring right at me. So I shot it right in its chest. And so the bullet went in here and came out its bottom rib. And then when I was field dressing it, I open up where the lungs are at, and the heart is like just sitting in between the lungs, disconnected. I shot the top of its heart off.
So that was probably real quick death.
Real quick death. But it still ran like 20 yards. I was like, holy cow.
With a detached heart.
That speaks to like
Pretty
the
crazy,
resilience and pure adrenaline that they operate off of.
Yeah.
Just
it's crazy, man.
Pretty crazy.
It is very crazy. Hell of a shot.
Not
Congrats
my skill.
Hey, does your
6-pointer.
Your uncle?
Yeah.
Does he let anybody take their guns out there and shoot?
He's pretty conservative on it because it's like his primary residence.
Oh, okay.
Yeah, and you got to be careful with that too, because when it comes to hunting, if you get people out there who don't take care of the land the right way, it can mess with the hunt. It can mess with the product of the farm. So like, as far as like what deer are they'll stop coming.
No,
that's right by your mom's place.
Yeah.
Oh, no?
Yeah.
Down that way.
Yeah.
Yeah.
No, not to hunt, but actually just to
We could
practice
shoot
with
if
firearms.
you want to shoot.
No,
You're a shooter?
I have a Glock, and I really don't know how to do it. I have no idea.
Come on down.
Come on down.
You know, and Brian and Zach would probably come, and that would be another whole story.
That would be some
would
good
love that.
content right there.
No, we're good, right? Cool, man. All right, so episode 22. Deuce Noah's got up. 22 with our guest Laura Kogut. Thank you for hopping on the show. Today we're introducing Laura as the newest agent of the Nickla Group, but for the commercial side, that's why I wore my commercial logo hoodie today. Welcome.
Thank you.
Thank you for coming on the show. I know you do not want to do this.
No.
We appreciate it.
This is not my thing.
Stepping outside of your comfort zone.
Old school, everybody.
But it is. I mean, it is. We've been talking about this for years now. And it's exciting because I think I made the mistake yesterday in my wording of how I phrased a question in our training yesterday when I said you've been through many recessions. But the point I'm trying to make is that it's exciting for the team because of all your experience in business. There's a lot that you've been through in a number of different spaces, and we'll talk about that a little bit today just to share with everybody who pays attention, which is not a terrible amount of people who listen to our podcast, but it is exciting.
We'll get more.
We're growing.
We got quite a few subs last 2 weeks, huh, Noah? You know? But it is exciting for us as a team to, especially the girls, to learn from another successful woman, for us in general to learn from somebody who's just so successful in multiple different parts of different industries, and kind of want to share that a little bit as you're going into the commercial side of the real estate sales business, which for us, we're primarily a residential team. We've done some commercial stuff in the past. We still are doing smaller commercial stuff here and there. But as far as and we'll get into why you picked commercial real estate and why you're doing all that, but just want to touch a little bit on your experience and your background. Like where did your professional experience start with?
Well, a long time ago.
Here we go.
Out of college, a little bit out of college, and I went to St. Mary's, Notre Dame, and graduated with a degree in business administration economics. And then I went to a job in Chicago, and the firm was Wainhammer Investments. It's a wealth management firm in Chicago, well established in 1930, can't remember the year, by two Illinois bankers who wanted to bring wealth management services to the community banks. And I started in an entry-level position. Prior to that, I had summer jobs to help support me in college, and I worked at the union at US Steel. I made more on my summer jobs, and I did my first year at Wayne Hummer.
At U.S. Steel?
Yes.
Yeah. What were you doing there?
Oh, I was in the office, and then I was out in the field a little bit. I came
Really?
home dirt.
That's awesome.
black.
Are you serious? I didn't know that.
Serious.
That's so
I was so
cool.
dirty, I couldn't even get in the house. I had to change out in the garage. So anyway,
Wow.
I started at Wayne Hummer, and I went through the ranks at Wayne Hummer in various positions. And my first senior role was the chief operating officer for the firm. And after that, they invited me into the partnership. It was a partnership of 22 principals, and that was an honor to be that. Back then, not a lot of women, so it was even very prestigious. At that time, I was then invited to sit on their strategic planning committee, and then I was a member of the executive committee. My role then increased where we decided to add financial services in the lobbies of banks. And we decided to do that by forming a separate company. And the reason for that is because at that time, the brokers, like at Wayne Hummer, were full service brokers. They did all products, stocks, bonds. And in the banks, typically at that time, they did more just package products, mutual funds, annuities. So there was a segregation of the skill set somewhat back then. So my job was to start the new company. I was president and CEO of that company, and formed it, established it, compliance, marketing, sales, and also helped sell to a lot of the Illinois banks, community banks. So we grew the company that way. Then about the time that got to be very successful, we had an offer to sell our company to Wintrust Financial. And we accepted the offer, and then I had a 3-year contract with them. And then at the termination of the contract, I went on my merry way to find something else to do. And that led me to real estate. And I worked for a healthcare real estate development firm in Chicago. And I was brought in to add, and grow the firm. And the charge I had was to make contact with the C-suite. Are you familiar with the C-suite? Mm-hmm. And I did that quite successfully.
Right up your alley.
Yeah, it was a nice fit for me.
Yeah.
And I also learned the business while I was doing this. Now, what we did could be multiple things. We had bought land in Arizona, and we were building out a medical campus. It had a behavioral health, assisted living, ambulatory care facility, medical office building. And then we decided, because of where it was and the location, we also added a hotel, and we also added some mixed use, some restaurants. So that was in it. We also worked with healthcare systems throughout the United States, quite often monetizing some of their assets. So we would purchase their asset, usually on their campus, and then renovate it, and then lease back to the healthcare facility. We also did standalone hospitals. We would do ground leases for many of the hospital campuses, and we would build the hospital and lease it back to them. Mm-hmm. Those were the larger ones. We did smaller things like medical office buildings, ambulatory care facilities throughout the United States. And I truly enjoyed that. That's where I got my love for real estate. Mm-hmm. I really felt it was a good fit. I liked it. It was interesting. The people are interesting, and I enjoyed it.
Yeah.
Little smaller thing. Then my mom needed a little help, so I decided to leave the company and help my mom. And in that, I built a house out here, which I loved doing in Indiana and right here in Ellendale Farms. And I enjoyed that aspect of the residential construction side. We hired the general contractor. We did a steel frame.
It took 4 years to build your house.
Yes, it did.
And we'll get into this a little bit more, but details.
Well, there's a lot in the house. There is a lot.
That's your strong suit.
And just a simple thing, and it was always with my mom in mind, because my mom was a go-getter. She would always do everything.
God, I love grandma.
So I added a snow removal system to the driveway so she wouldn't go out while I was at work and shovel the snow. So, little details like that we added. So it's a beautiful home. I really like it. There was more family out here for my mom to interact with, and it was a good thing for her. So, and then I've always known Alex. And we've always talked about partnering up on commercial side, and so it brought me here, and I'm excited to be back in the workforce again.
Yeah, and I think what's really cool for me about this is like for you. I mean, you know this, and you don't like when I say it, but I've always called you a mentor in a lot of ways because I came to you for a lot of things during everything.
Way back when you started, yeah.
And I would come to you for things, and I mean, it started when. Because my best friend Zach Kogut is your nephew, and I grew up coming over to your home, and we just would talk. We would talk about a lot of things, and then as I started getting in the business world, then we started talking a lot more, and I started learning a lot more from you, and I'd come to you during the worst times, and the hardest times, and the best times, and I remember coming, to your home and just. I remember seeing this is when I was getting into real estate, and I'm like, your home is one of the most beautiful homes I've ever seen. And it was one of those times where, still to this day, and I've seen a lot of houses in the last 10 years. And so just as we grew closer and we kept talking more about the business side of things, this is really cool because, for us to be able to partner now in this side of the business, I think is really cool for a lot of different reasons. Obviously, me being a little kid and learning from you, but now also when we look at our strong suits in business, they're opposites, which is exciting to partner, because you're, and I mentioned this a little bit yesterday, but you're ready, aim, and then fire. And I'm ready, fire, and we'll figure out aiming later. So we have two completely different viewpoints on things.
Which is really good.
It is.
That's a great mix.
It's good, and it is. And the details are not what I'm great at. The details are what you're phenomenal at. But I want to go. I just want to say how exciting it is for me, and then for our team, and all the other ways I kind of mentioned a little bit earlier. But for all of us to be able to learn from you, but then also for our clients to know that they're going to have the service and the value of your experience and everything that you do. It's something that I couldn't have for the next 20, 30 years. So it's very exciting.
Well, I think what I see here, but I knew from you specifically, it's always about the client. You do what's right for your clients. You put them first. It may not be the best thing for you, but if you put them first and you serve them properly, and this honestly was the same premise I had at Wayne Hummer or any of the companies, you'll be successful. That reputation will get out there. You do the right thing, and it lives with you.
And now we'll move that into what we're doing now. Yeah. And going back, I want to go back real quick to Wayne Hummer and Wintrust, because that's a big deal. It's not just this small little thing. I mean, when you were COO, before you were the CEO of that other division, that other company, how many people were a part of Wayne Hummer at that time?
Oh, there was probably 300. What we were considered as a medium-sized wealth management firm. There were larger, obviously your Merrill Lynch's and all those, and your Lehman's and that. But we were medium-sized. Chicago-based. Although we had many customers throughout the United States, we were known as you hold quality investments, and you service your client. But where you want me to go with that?
Yeah, no, the size of the operation that you were
there's
as
about
a CEO
150 individuals. Most areas of the firm, other than non-sales at that time. Sales was under me on the new company, but as far as the COO, pretty much everything other than non-sales was under my organization.
And you're running all the operations of that
and
whole business.
And at that time, which was a really big deal, we were an allied member of the New York Stock Exchange. So all the partners were a member of the New York Stock Exchange because we owned a seat. So, and I ran the trading for my organization. My crew ran the trading for the New York Stock Exchange, American, Amex, options, and all that. We're responsible for all the interaction with all the governing bodies, meaning the SEC, the New York Stock Exchange, the Option Exchange. They came in and audit you all the time. We had exceptional audits. That's my nature.
Not surprised.
not surprised. So there was a lot of detail in that. Yeah. And, it was fun. It was fun. It was good company.
Yeah, and I think it's important too because at that time you had made the decision that business was what you were going to do, right? I mean that was your whole life.
I did. I kind of jumped in things 100%.
Yeah.
I spent a lot of time there. I spent a lot of time I loved it. I enjoyed it. We grew the firm. The firm was a great firm. It was a great bunch of people, honest, ethical, good firm, and we grew it. So you're right.
And to get there, like you said, back at that time as a woman was a big deal.
It was.
Yeah.
And just to put it in frame reference, back then, now you go to lunch and you have a salad. Back then, people went to lunch and had a drink. They had a martini. It was it was a total different atmosphere than what you're used to now. That was never what I did. But that's kind of the difference. How I've seen things change from way back then till now. It's a different environment.
Yeah, and then then you were the CEO of that president and CEO of that company that branched out. It was still under Wayne Hummer's umbrella, right?
It was under Wayne Hummer's, and that company right now today that we started, and it had a call center and everything else, because we were actually, all of our wealth management or investment advisors were in the Chicago office. We didn't have branch offices. We had one in Appleton, but we didn't have them pretty much in Chicago. When we were going out to the banks to have an registered investment advisor in the banks, we needed a call center, so we had to establish a call center. We had to establish a whole different way of operating with that. And we got it to how many? 100? Maybe 100 investment advisors out. Not quite as many as Wayne Hummer, but close to it. And that platform that I established under that company is the platform currently today that Wintrust uses in their banks.
Oh, that Wintrust uses in their banks.
That's the platform, yes. Because again,
their trading platform?
Not it's part of it. The trading platform is on there, but just the entire call center, the operations, the flow of workflow, the whole 9 yards. Yeah. Wow. Because it was positioned to work with people out in the field, and that's exactly how it is with Wintrust today, because they're out in the bank lobbies. The investment advisors are in the bank lobbies.
So then you built those up. Wayne Hummer sells to Wintrust, and then at that point you took some time, right, with Mom?
I took some time. A little bit of time with Mom, built the house, and then
the real estate development.
I went to real estate development.
Healthcare development. Very cool. So then, transitioning now to this point, with your experience with the real estate healthcare side of things and healthcare development and all that, what is it now that interests you in just being in Northwest Indiana and serving clients on leasing and selling and buying, investing into commercial real estate? What's led you to this point? Because there's a lot of things. We discussed this a little bit. There's so many other things that you could do based on everything that you just talked about. There's hundreds of companies across this country that would pay you significantly more money than I ever probably could for you to do what you've done in a number of different ways. Why have you decided to do this?
I'm at a point in my life I can make decisions. I can make choices. And I know you. And I respect you. It's been a long time relationship, and I think we can partner well together to grow this. I think I have, like we said, certain attributes that offset your attributes, and I love Indiana. I mean, from Chicago, I moved from Chicago, that Chicagoland area, to here. I like the environment, I like the people, I like the community, I like helping people. So in that, if we can find things here to help people, I like that.
Sweet.
Absolutely.
Do you got anything you got on this at this point?
Just thinking about having you in the workforce in Indiana. Obviously, that's awesome for us, and especially manning the commercial space for our team. Because one of the biggest conversations I have with clients that are coming from Illinois is their biggest concern is, what do we do in Indiana? What businesses are there? What amenities are there? Things like that. So I'm excited to have you blazing the trail for us.
Me, Alex has a tremendous amount of contacts. He's grown up here. He's raised here.
Totally.
I think there's a lot of opportunity to help those individuals, and I think our skill sets partner up for that.
Yeah, it's gonna be a lot of fun. I'm just thinking about it too. I'm excited to share with people as those contacts and our relationships start to work together, and it starts to come into someone looking to lease a location for their business, someone looking to invest and develop, or whatever it is, all the things we're going to do over the years. It'll be cool to have people reference back to, honestly, to this, to hear your experience, because there's, just to go back to the show, hey, you're going to be partnering with Laura and I, or you're going to be working with Laura. Here's a little bit about her, right? And I think that's important for people to see, because for me, I almost feel like, with your experience and what you're capable of, right now you've got a governor on you because of what this team and what myself as a leader and everything can provide. Right now we're governing you to 30 miles an hour, and we got to get you, and I know you want to start going, and I'm very excited for it. So, and this was always something we talked about too. This is kind of this was a natural progression for me personally. I love dealing with business people. It's the majority of my friends are business minded. Yes. They're entrepreneurs, they're business owners, they're investors. These are the people that I have the best conversations with, and because that's where I go. I listen to things on that. I read books on this. These are the people that I tend to relate to the most and get along with the most, and it's where a lot of my closest relationships have gone to, and as it's a natural progression for me, because I've been saying for years I wanted to do commercial real estate, but I love residential as well, and it's hard to let go of it in many different ways, but it's a good transition for us to do it, because right now I don't have all the time to do it myself, nor do I have all the capability to do it myself. And this is a great way to make that work, and us to kind of transition into providing more value for people, because again, these are the people that I know in the conversations that I have and the relationships that I have, but we're not able to provide them, or haven't been able to provide them, the highest level of service now, and so now we can, and I think that's exciting. So just to have that all in house, and plus to know that they've got your experience in business and everything, plus my understanding of the area and all the things that go with it. So so yeah, I'm very excited about this. Is there anything else that you wanted to say in regards to the commercial real estate side?
I don't like talking about myself.
I know you don't. That's the most I've ever heard you talk about yourself.
We appreciate it, though.
Yeah.
Definitely valuable insight for anybody thinking about using our team for commercial investing.
Yes. Yeah, and
I love meeting people. I love
You're
the
phenomenal
professionals
at that.
and talking and just finding out what they want to do,
Yeah, you are.
and helping them do that.
You've been kind of coming with me on appointments now for the last few months, and it's been even better than I had imagined, I should say, for us, like working with different people and talking, like figuring out what they really need. And that's a great place to be, because I think a lot of professionals in the real estate business, like you said, you have the ability to make choices, right? A lot of real estate agents or real estate professionals, commercial, residential, anything, the way that their motivation oftentimes is based on the result of what that client does with their money, and does buy or does lease or whatever, because maybe they don't have the choices, right? You're doing this because you literally just want to do it.
Yes.
And I think that's one of the coolest things ever, when you can make decisions because this is what I want to do, right? And just like that's how your whole life in business has been. You made the choice and the decision. I'm going to be a businesswoman, as opposed to, especially at that time, being a wife and a mom and all those things. You went on and said, I'm going to be a businesswoman. And I think that's really cool.
I have to give credit. My dad's been long gone, but he had 3 daughters to start, and then 7 years after me, a son. But he groomed us to be capable, individual, professional women, if that's what we wanted. He didn't care what we did. He wanted us to do what we wanted, and he groomed us for that. He made us. I give my dad a lot of credit for who we are today.
That's awesome.
That's amazing.
And I've also had the blessing of knowing the Kogut family, and I love it. I love the family. It's awesome. But
I gotta say,
even Zach. So
Zach's great, but I gotta say, just like hearing you talk and knowing you personally now for a few months now, like knowing the position you're in your finances, there's probably no one better to put their self-interest aside as a fiduciary and take care of a client. Like that, if I was looking to invest in commercial real estate, that would stick out to me.
for sure.
So for what it's worth.
Knowing that this person doesn't need my commission.
Yeah,
Knowing that
that's phenomenal.
that's because that's one we talk about this all the time on the residential side. I say, like, and it's the truth, because I felt this in the beginning. I had no money. Like, this deal was a big deal, like I have nothing, like I got no nest egg, I got no bills need to get paid. And the way that people act, when they act out of emotion for what is in it for them, I do not believe you can give the best value to somebody with your emotion for what's in it for you is involved. And it's a conflict.
It can be a conflict.
100%, which I understand why people look for people with experience to use. That makes sense. I was blessed that a lot of people trusted me early on, and I was able to separate as much as I could. But we talk about it all the time with the team. You've got to get yourself going and emotionally uninvested into this client. It's got to be all about what's in it for them. Period. End of story. What is in it for you, you cannot pay attention to. So, which is a beautiful place for you to be. So anyway, very excited for that. I mean, as far as the commercial side of things, we're not in the market, and we discussed this a little bit recently. We're not in the market where you can say, I do just retail leasing from 1,200 to 2,000 square feet. We're not in
No,
Chicago.
that's not.
Like in Northwest Indiana, it's not a big enough market to where you can specialize so much.
Right.
You only do one
Exactly.
thing. There are absolutely specialists. Another mentor of mine, Jerry Steiner, he's very good in the land space, right? Willie Steiner and that, like,
Yes.
he's very good on land and vacant land and development. That's one thing that he kind of specializes in. There's other people who kind of have their niche, right? And I've got friends that do, multifamily investing and so on. So we're still kind of figuring out, hey, what's the thing that we enjoy to do the most? But as of right now, the beautiful thing about it is we can provide value to anybody and service to anybody.
Right.
And that's something, and we have experiences on those too.
Yes.
We've had transactions. We just sold a church last week. Shout out to Missy for that. Like we've sold large $2+ million buildings. We've done leases and transactions for nice space. So retail and industrial and commercial and office and healthcare, all that. So we have a number of different clients that we've had the experience with, and now we can bring that value to other people. So I'm excited for that. There were 2 stories I did want to talk about a little bit today.
Okay.
Briefly, and kind of give our thoughts on it related, since it is recent. Plus, with your experience in the banking, we discussed this a little bit, but your experience in that world, you've got a lot of knowledge on this too. So if you want to chime in, of course. There's two things I want to discuss. First was the CPI, Consumer Price Index report, came out, and which, for those of you who don't know, I don't want to bore you I didn't know all this stuff until fairly recently, but it's important to pay attention to because it really has a big impact on our economy. Consumer Price Index, CPI, is basically just shows the rate of inflation, right? The cost of goods. And it's no secret, we've talked about it a lot recently on a number of our channels, YouTube and Instagram and all that inflation is what is changing a lot in the real estate markets, but also just cost of goods, right? Look at the cost of gas. Look at the cost of food, which is unbelievable, right? Energy and food and those things. That's a big problem in a lot of people now, especially as we might be going further and closer to a recession as what's being forecasted. So the CPI came out that Consumer Price Index came out that it was lower than what was expected, meaning we've been talking a lot about rising interest rates. That has slowed down a little bit and to 7.7%, or excuse me, to 7.7% all categories, but 6.3 if you get rid of food and energy. So these things now, with inflation slowing down, just want to get your guys' thoughts on that report and what came back. Mitch, do you have
What did
anything
they slow
on
down from?
it went down from 8.2% to 7.7%, all categories. So core inflation versus all. And Mitch, do you have any thoughts on inflation in general?
Yeah,
and what we're seeing.
Like short-term trend down in inflation honestly kind of makes me a little nervous. Jerome Powell has said the pain is coming. That's his famous line throughout the summer. He said that. So I think with rates trending down a little bit, and I'm speaking from a residential perspective here. With rates trending down, what I could very well see is all the qualified buyers in the market flooding to lock something down under contract, and then prices going up, and then inflation going up. So it's a delicate balance. When I think about and I have a very South Lake County mind. So when I think about interest rates and the inflation, I think about it almost like a clutch on a car. When rates go up, that's like pushing the clutch in. You're disengaging the motor. When you let off the clutch, the car starts to go. The speedometer starts to go up. So you're lowering the interest rate, then prices go up and the cost of goods go up. And then we still have supply and demand issues as far as not only housing, but just everyday goods. We have I'm ordering appliances for my kitchen, and Best Buy just canceled my dishwasher. Just said, you're not getting it. Here's your money back.
Wow.
So it's
It took 3 months for me to get my dishwasher.
It took me 3 months to figure out I'm not getting mine. So when you got things like that going on, that's definitely something, to it just puts your thumb in the garden hose of the prices of goods. When there's less supply and just as much demand, then prices go up. So all that to say that I am nervous that if inflation does trend down, that enough people will bark at Jerome Powell and he will lower the Fed fund rate and then lower interest rates, and then prices are going to skyrocket again. And then we'll be back where we started.
Sure.
And we did all this last couple of months all for nothing.
Yeah, right.
But I got to think that Jerome Powell's probably smarter than me when it comes to macroeconomics.
Sure.
So he's probably going to be just fine.
And what you're talking about, if rates go down, I still think that they are at a number that if it's in the mid sixes, it's still at a number that I don't think people are going to be going crazy on, right? So I don't think that people are going to be going too crazy on the like overspending right now, because it's still a pretty high rate,
Yeah,
like
absolutely.
compared to what everyone's used to.
Totally.
So,
Yeah.
and what that's doing for people's affordability. So, I mean, it's good to see that inflation rate has come down.
Mm-hmm.
And that's great, because that means that what they're doing is working, and hopefully it can continue to work. But yeah, I mean, I agree with you. I think that there's also a lot of data, which I think we're going to start to share here in the next few days and weeks, that there's strong data that shows that interest rates into mid of 2023 should be coming back to a healthy of 5 to 6% level.
Yeah.
Which would be good.
It would be sustainable. Would be the word
sustainable
that I would use.
level. Yes.
If I could say it out loud.
Yeah, it's sustainable. But the thing though is that, like, because if you think about it from the residential perspective, go ahead.
But unemployment probably will go up.
I think you're right.
Yeah.
I think you're right. Which is going to
Unfortunately,
ultimately lead to a recession, which is what they're looking at, which is going to slow down more consumer spending. If you look at
Go ahead.
there's a couple different reports that came out as well talking about how if you look at, and I should pull the article to share, but right now, if you look at the earnings from both Visa, MasterCard, and then also banks looking at HELOCs, a lot more people right now are borrowing against their credit cards and borrowing against their HELOCs. If you also look at the earnings reports and recent ones of what companies are increasing in value currently, Home Depot and Lowe's also. So a lot of this is showing that people are borrowing against their HELOC to then improve their homes, improve their property values, but also the cost of these goods. And people, you look at Facebook laying off or firing 11,000 people, and all these companies who are starting to lay off.
All the tech companies.
Unemployment looks good right now, but that's what happens before a recession. Before 100% of recessions is every single time it's at the low, it's on the low end of unemployment, and that's a lagging indicator, right? So it's not a leading, but we're seeing people now slow down on what they're spending because the cost of groceries is still insane. So they got to go against their credit cards, right? So it's going to be interesting to see what happens over the next few months. The response to that, historically, 100% of the time, is the Fed lowers rates to get people spending again. Yeah. So it's this lever, right? Mm-hmm. And I think over the next probably, what are we in November, 6 months, we're going to, what was interesting is how they were saying they're going to do another 50 basis point raise, and then the CPI comes back, and then they shoot it down by 0.6%.
Changes everything.
Very, 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 very interesting.
Do you want to talk a little bit about the 10-year treasuries versus?
Yeah. Oh, the spread.
That was a great point you brought up. I thought was
so
interesting.
something that if you look at that completely changed my perspective on things. And this one we might need to share a graphic on because it's confusing. But if you're into macroeconomics and all that stuff and you nerd out like us, one of the biggest things that you can see that's proving that interest rates very well could come down is the spread. So naturally, if you look at mortgage rates and the Fed fund rate are determined based on the 10-year Treasury yield. So basically, if you look at the 10-year Treasury, there's usually a spread between 175 basis points to 200 basis points, which simply put is about 1.75% to 2%. So simply put, if the 10-year Treasury is at 3%, you should be looking at interest rates of about 5%.
Right.
Okay. Right now, what we're seeing, and we'll share this graphic so you can visually see it, the spread between the 10-year and the Fed funds rate is a 3% difference, meaning it's 1.25% to 1% higher. Okay, so that means that right now on rates, the Fed is making 1% or more on that spread, showing and proving that they have room to bring that down, which they just did. So that's why I think if you look at over the next couple months,
that's the positive.
That's the positive. That's the positive. There's a lot of people right now talking about how they think rates are going to go up. I think that it was wild to me how they just dropped them 0.6% overnight. That was crazy. As soon as the inflation showed that it was working, all right, drop them down, right? I think a lot of people are sitting in fear, and which understands.
The media has a lot to do with that.
They're
fear-mongering.
You want to know something? Sorry, go ahead.
Go ahead.
No, finish that.
I was just going to say they're fear-mongering. It's always scare tactics, and they're not really portraying what you're talking about, what we're talking about, making these analysis and seeing things that could be positive in the future.
Yes, I had the blessing of being on the biggest, the number one guy in the mortgage industry for like knowledge and information. I had blessing of being on one of his webinars live and him sharing the details of what's going on. And that's why we're going to make some more content on that, because if you were to ask me, I would trust that guy over what media says. There's a number of things that I want to share with you guys and graphics and stuff in the next upcoming videos I think we're going to make that are going to show some pretty clear data and data that shows why rates very well could just come back down from where they're at, as opposed to the media telling you, they're going to 9-10% and the housing market's going to crash.
But one caveat to that, they probably won't come back, maybe in my lifetime, to the twos.
I don't see how.
If they come
we
to
got
the twos,
lucky.
we got bigger problems.
Yeah.
We got lucky, and that's why prices
So
got to where
just
they're at.
setting an expectation.
Yes,
So when you
totally.
say they're coming down, they're
Yes.
not coming down to two.
No,
Yeah.
exactly. Coming down from where
Great
they're at.
expectations
Yeah,
set.
Which I think a 5% interest rate, 5.5% interest rate is a healthy place to be for markets and all that. But going to what you said, you're 100% right, because I went to search this article to find the article where I found the interest rate drop, and I searched interest rate drop last week. I struggled to find an article. And if you search anything negative, there's a million of them.
Yes.
yeah.
Yes.
So
Yes.
everybody's going to listen to the negativity on it. Is it our business and is it in our best interest for interest rates to come down a little bit? Yeah, it is. It's our business. It's going to make things healthier. But I think that you have to separate the bias from the data. And there's a lot of data that shows that things are going to get to a healthy place in the next few, from the mortgage rate side and interest rate side on real estate.
And that's what we want to keep bringing to you guys.
Exactly.
Yeah.
The positivity and the facts, the data.
The facts.
We listen to all the negativity too. Like some of my biggest mentors are saying interest rates are going to 10%. I listen to them constantly to see what theirs, and then I look at the other side of it too. But I think that we'll continue to share that information. And I think things need to slow down to a healthy pace, like from what we had the last 2 years.
Totally.
So
More normalized.
yes, it's definitely interesting in the point that we're at. So anything else you guys want to add today?
Yeah, it's just one thing that Gary Keller says all the time is the market of the moment. What is the opportunity in the market right now? And one thing that I'm seeing with the buyers, I work largely with buyers. One of the things that I'm seeing is less buyers in the market because of a combination of rates and seasonality. So if you are qualified to buy and if you are looking to buy, you could probably be dealing with the least amount of competition that you're looking at for foreseeable future and past 24 months.
For sure.
Because of the combination of those two factors.
And we've been sharing that too. I think we're seeing buyers get a lot of really good deals.
Totally.
In terms of pricing. And let's just say, if you put this hypothetical situation out there, let's say somebody buys and they're able to negotiate not only a good price, but also a buy down on the rate from the seller, and maybe they're doing an adjustable rate, or they're doing a 2-1 buy down, or some form of unique financing that gets them a lower rate up front. What if 12 months from now rates are at a 5? Let's just say, or 5.5, and instead of a 6.5, 7, or they're at a 5, a year from now, and they're on one of those adjustable rates, and they're at that. If you plan to be there and it makes sense to refinance from the numbers for enough time that it makes sense to refinance, you can then refinance. So not only did you get a better deal up front, you got a good deal from the seller, good deal on the price, good terms, and then the time comes where you could refinance that and fix it for 30 years. You just won, because now the values are going to go up. So I think you're 100% right. There's a very strong argument that it's a phenomenal time to buy right now, because when those rates do go down, more buyers into the market, prices continuing to go up, and you got a killer deal because you bought now and then you refinanced and fixed it for a long period of time, right? The opposite side of that is if rates go up super high and you bought now, then prices go down, just stay in it long enough, so don't make any decisions that are
time heals all wounds in real estate. So
perfect.
Just wait.
All right, cool. Well, good show. Thank you for coming.
Yeah,
Welcome
thank you.
to the team.
Appreciate
This
it.
is
Looking forward.
amazing. I'm very glad.
exciting.
It is very exciting. Thank you guys for watching. Appreciate it. And we'll talk to you guys soon. Thank you.